With this crypto trading strategy, you'll know exactly when to time your entry and exit points for huge gains. In this video, I'll show you exactly how you can use some really simple technical analysis to read the Bitcoin chart and be on the right side of the trade way more often. Hey guys, James here with MoneyZG. In this video, I'm going to show you step by step what you need to do to use a strategy called pullback trading. With this technique, we're going to use some technical indicators to show us exactly where to get in and out of our trades for best results when trading Bitcoin or other cryptos. Firstly, I'll go through what pullback strategy is and how we can implement it. Then I'll show you exactly the rules we need to follow with this strategy and explain to you what techniques we are using and why. After that, I'll show you how we can use this strategy on the Bitcoin chart and some examples, including how to go ahead and make a trade. Then I'll explain how you can take this strategy and tailor it to yourself and who you are as a trader. I'll split this video into sections, which will be listed as timestamps in the video description. Other useful links and resources will be in there too, so be sure to have a look. First up, we need to choose our trading venue. I'm going to use Binance for this for a couple of reasons. Firstly, it is the trading venue that I use the most. Binance has amongst the lowest fees and also importantly, the highest trading liquidity of any platform. So overall, I like Binance. If you haven't got a Binance trading account, you can sign up in a couple of minutes. I'll leave the link to Binance in the description below. You can go through and sign up for an account and then follow along trading with me. So I'm going to come straight through into the advanced trading features of Binance. And it gives us everything that we need, which is all the technical analysis tools that we need for trading like this. So now that we are using Binance, let's go ahead and look at what exactly this strategy actually is. And I've got a document here that we can see. So this is what's called a pullback trading strategy. What exactly is pullback trading? Well, essentially with pullback trading, what you're doing is identifying the correct time to actually enter into a trade. This is based on a few things, but really it's based on the overall trend and then a shorter term pullback in the trend. When we identify this, that is when we can load up and go long. And we can use a few different indicators for this. We're going to be looking at the Bitcoin chart. And we're going to very easily put some indicators on here to tell us what the trend is. We're not guessing here. We're going to use these indicators and we will know 100% what the trend actually is. And yeah, I'm sure you can see right now, it's obviously in an uptrend. That is very obvious. But it's not going to be like this forever, and so we can use the trend and the indicators to make sure that we're doing the right thing. But there's really two main things that we need to decide upon before we go and enter into this strategy. First one is that the asset that we're trading is in a significant uptrade over time, and I don't think anyone can question that with Bitcoin. Secondly, the strategy that we're using is going long. So what we're looking to do is enter in at periods where the price is relatively lower and then ride that move upwards. We're not going short, we're not betting on the price moving down because the overall trend is up. And if you're trading against an overall trend, then it is going to be statistically harder to make money trading. It is still possible and you can trade intraday and there are other strategies, but for this strategy in particular, it's not exactly day trading, and so we're going to be going with the trend. So now that we know those two main points, we're going to try and go long and go with the trend. Let's look specifically at what exactly we do. Firstly, the asset that we're going to trade. And for me, this is Bitcoin. When trading cryptocurrencies, there's really no other crypto that I would be looking at into day trading or trading with a shorter time frame like this. This strategy is trading on technicals alone and not news and information. Now, if we look at the cryptocurrency rankings, there are many other cryptocurrencies that I really like to invest in. These are going to be trading more on news and events rather than technicals. Bitcoin really is the only asset in the cryptocurrency space right now that trades more on technicals because of the huge institutional interest in Bitcoin compared to other cryptocurrencies. So therefore, we have Bitcoin right here. Bitcoin against US dollar Tether, the biggest market in the crypto space. That is what we'll be trading. Next up, we want the time frame for the candlesticks. Here it is. It's a 1-day time frame that I'm using. So this isn't specifically day trading where we're in and out every day, maybe up to 5 or 10 times in a day. It's going to be a slightly longer trade overall. So we've got a 1 day. So we come to the chart and we make sure that the candlestick time frame is 1 day, as you can see here. This will change depending on the strategy that you're using, but that is what we want for this strategy. Next up, in terms of the moving averages that I'm using, I'm going to use one only, and that's a 200-day moving average. So I'm going to come over to the chart right here and very simply change the moving average. I've got a moving average on the chart right now, which is a 50-day moving average. I'm going to come over to format right here, and you can see inputs and length. I'm going to change that from 50 to 200 like this, and then I'm going to press OK. What we have now is a 200 period moving average. So we're looking at the 1-day chart. So that will be a daily average. So 200 days. Then we're looking at this average of the prices. What the 200-day moving average gives us is essentially a long-term trend. If you're looking at a 5-day moving average, that's obviously a short-term trend. But we can see that this is definitely trading way above the 200-day moving average. And that is one of the prerequisites for this trading strategy. The chart absolutely must be above the 200-day moving average. The reason for this is that if the price is below the 200-day moving average, then we could assume that the chart is actually not in an uptrend. If you're not sure how to get moving averages on the charts in Binance and it's not here for you, then you can come up to these technical indicators right here and search for MA, and then it'll give you moving average. Really simple. Put that on the chart, put the color that you want on there, and then choose 200-day. Next up, I'm going to draw a trend line on the chart, and this is going to give us just a simple visual representation of some sort of level of support in the chart. So what I'm going to do is just come through here and just draw a trend line. So I'm going to come over to the left-hand side where the technical indicators are, just choose the trend line here. Now what I want to do is choose 2 main points in the trend. That will give us an overall trend line. So I'm just going to draw the trend line right here, as you can see. You can zoom in a little bit, and then we can just connect these 2 points. This will give us an overall trend and a visual representation of areas of support in the chart. Now you can definitely see that we are in an uptrend for Bitcoin overall. You can see that the lows in Bitcoin are higher. So this is a low, and then up here is a low, but it's a higher low. And so this is definitely an uptrend. And it will give us areas that we may look for our stop losses and also other trading entries. Next, we have to put on the RSI, as you can see here, to time our entries. We're going to use a 10-day RSI. Well, what is an RSI? Well, it stands for Relative Strength Index. RSI is a momentum indicator. So exactly what it does is measures how strong a recent price move has been in comparison to historical prices, and then gives us some areas where the chart could be maybe overbought or oversold. Now, if you want a simple explanation of relative strength index, you can go to Investopedia. I really like this website. If you're a beginner, you can learn so much about relative strength index and all the other technical indicators. But you can see here, RSI is a momentum indicator, and it will show us some overbought and oversold conditions. Well, what exactly does that mean? Well, hopefully it will tell us when prices are actually too high or too low compared to historical prices. That's really important, because if we can actually tell that a price is historically quite low, then that might be a time where we can actually enter into a trade and start trading. And then if a price goes up really high, the RSI may be telling us, hey, this thing is overbought, and it may revert back, which has happened on a couple of occasions. And so it's really trying to give us some entry and exit points for our trades. What I'm going to do right here then is just take the volume off of the chart, and I'm going to go up to the technical indicators right here, and I'm going to search for RSI. It's called Relative Strength Index. So I'm just going to click on this one, and then that should be added to the chart down here for us. You can see that the chart isn't really very good looking and you can't really see it. So you can go and change this. So I'm going to go to the format right here. Now, really importantly, I'm going to be using the RSI over a 10 period and not a 14 period. That will become clearer in a minute, but I want to change the RSI to 10. So it's actually going to take 10 periods for us and then put that on the chart and not 14. Because we're using the day chart in the candlestick pattern, then we are looking at 10 days here. As for the style, I'm just going to change this around so it's actually a little bit easier to see. So that is much easier to see for us now. As you can see here, the line in the middle, the red line, this is the RSI and the indicator that we're using. The lines in the bottom at the top, as you can see here, will give us entry and exit points. And on the right-hand side, we have the strength index. This is super important because you're going to use these figures to time your entry and exits. So you can see here, it's actually 80 up here. We go to 60 and we go to 40 as well. These are really important. So as we come back to the trading strategy, we can see that the entry is going to use a 10-day RSI, and we're going to look for a figure of around 40 for our entry point. As we come back over to the chart, you can see that 40 is around about here where my mouse is right now. You can see on the right-hand side, it says 41. or 40.8. Typically with the RSI, when you get down to a level of around 40 or even 30, that is typically known as oversold. Oversold means that the relative strength of the price and the price move is fairly low in comparison to the rest of the historical moves. You can actually see that when the RSI is low, as it is here at 40, if we move up to the chart, that absolutely was the absolute bottom of the pullback to the trend line that we just drew. If you look at the chart now, you can see that if you timed that entry when the RSI was around 39 or 40, you would have literally bought right off this trend line bounce, and then you'd be in profit up here. Now, something to note is that this trend line is something that we've drawn after the fact. Those prices already bore out this trend line. We didn't draw the trend line before this happened, only after this happened. So that is something to take in mind. Technical analysis, especially trend lines, tell us what happened in the past. And so the trick is to actually use the RSI before we know what the trend is going to be in the future, to try and time our entries before we actually know what the future is going to be. So there are our entry points. We want to look for an RSI figure around 40. Now, if I was trading stocks and I was trading maybe like the S&P 500 or in the UK, the FTSE 100, which I used to trade when I was working professionally a lot, then you'd be looking at different RSI figures, probably be looking around about 30, which is typically the figure that is oversold with stock indices. But Bitcoin is a little bit different. Bitcoin is way more bullish than those. It's in a massive period of an upswing and an uptrend. It is a new asset, not like the FTSE 100 or the S&P. And so we do have to change the RSI a little bit. So I've gone for a 40 level here, as that is what Bitcoin tends to trade off as our bottom level. And then the top level, we're going to be using 60. So if the RSI reaches about 60, that is going to be our exit point. So if we enter when the RSI is around 40, we are going to look. And if the RSI ever reaches up to about 60, that is when we're going to sell. We're going to trade out at our profit, and then we're going to look for another entry again in the future. The only exception to this is if you've been trading for 10 trading days, you've had an open position in Bitcoin for 10 trading days, we're actually going to use that as an exit point if 60 RSI is never met. The reason for this is really simple. If you're trading longer than 10 days, then essentially you maybe are buying and holding Bitcoin, which is absolutely fine and there's nothing wrong with that. But we have to have an exit point for this trading strategy. Otherwise, it's just simply a buy and hold strategy with timing and entry point. That would be absolutely perfect if you want to use this strategy for that and actually using it just to time some entry points so you're not paying up and having FOMO up at these top levels, but you're just looking at the RSI and saying, I'm going to wait for a pullback until the RSI is a bit lower, then I'm going to buy it and then I'm going to hold for a long time. But for a trading strategy in particular, there has to be some exit point so that you can actually compare your trading strategy to others over the long term and see if it's actually working for you. Next up is our stop loss. And if you are trading in the spot market, so you are using cash to buy and hold Bitcoin, you're not using any leverage, I'm going to be looking for a stop loss around 2%. So if the price moves down 2% from our entry, then I'm going to say that the entry has probably not worked. The chart may be having a reversal and we may want to just get out, maybe have another look at the chart and also the current trend and see if we can maybe time an entry point in the future. But for sure, if it's moved down 2% or more from our entry point, then I would say we need to cut our losses and maybe regroup and go again. If you are looking for a buy and hold strategy and just looking for an entry point, this stop loss maybe can just not be there at all. You don't need a stop loss if you're buy and hold, but I would say 2% for this strategy is good. Now, if you're trading on margin, which you can do on Binance, you can actually go to 3x margin or even 10x margin, or even go and use futures and actually trade futures of Bitcoin on Binance. Traders do this because it gives them margin, which means they can put $1,000 on account, but actually open positions that may be worth $10,000. It is a way of leveraging up your trades, but it is incredibly risky. If you're a beginner or new, I really would not suggest it. But I would say if you are using leverage, I'd probably take this stop loss to under 1% and just being really tight with your stop loss, because when you are trading on leverage, it can be very easy to just lose a lot of money. So that is the strategy overall, as you can see here. And now we're going to see how this actually works on the chart. So we're going to go through with some sample trades. And if you haven't already, do subscribe to the channel and drop the video a like if you are getting value. But with that said, let's just blow the chart up here and we can see exactly how we would enter our positions onto the Bitcoin chart. So with this strategy, firstly, the 200-day moving average, the chart is way above that. So we're going to get right involved. Then we're going to come down to the RSI. We can go back to the recent history of Bitcoin and take these 2 points, like I said. So let's look at the RSI. The RSI is around about 41 or 40 at the lowest point right here. That would be your entry point. So what we could do is a couple of things. You could either see that move and then enter straight away, or you could see that move and then enter on the next trading day in the morning to actually get your trade up and running. With our current pullback trading strategy, we would enter right here. So we would actually enter at this point on the chart, as you can see, and that would have been a very good position to enter for us. So we would have actually entered around this price right here. But our exit point is going to be different. We need to look on the RSI and say, is it going to reach 60, which is our level for exit point? So we're going to come up to here. It reached about 55. It's not 60, so we're actually going to not come out. Then we have it 60. So that is going to be our exit point right there. So we're going to draw another arrow on the chart where we would have exited right around here. And as you can see, that definitely would have been a profitable trade for us. We got in around 45,000, let's say, and then we got out at around about 50 or 50 and a half, maybe 51,000. Our stop loss on this trade would have been around here at, let's say 44,300, something like that, maybe a little bit lower. So that would have been our stop loss. So that would have been what we would have lost if the trade moved against us. We can zoom in right here. So this would have been our entry around here on the opening price of the next day that we saw the RSI give us that signal. If it had moved down, we would have lost this much, but it didn't. It moved up, traded sideways, and then on the next day when the RSI was around 60, we made that much. Now you can say one of the downsides of this trading strategy is that if we just would have held this and actually not sold out when the RSI was 60, we would have got a much larger move and bigger profit. And so yeah, we definitely missed out on some profit with this trading strategy. However, like I said, we do need an exit point. And if you did buy and hold and come up here and thought, well, I'm really clever and I'm not going to exit, it would have come down anyway to around about our exit point where it was right here. So definitely that's something to keep in mind as a trader when you actually exit. But like I said, we do need a firm exit point for this specific strategy. Otherwise, we can just buy and hold and take the future as it comes. So if we actually come back out and do the exact same thing again, just to see how the chart would have been on a different time, the RSI got to around about 39. So we can therefore time an entry here, and that would have been at this level. So we can come in around this level, and that would have been our entry point for this specific trade. We would have entered on the next trading day after the chart gave us the information that we needed. So that would have been on this green signal right here, this green candlestick. We would have got in at the start of the day. So we would have got in around about this price. Then we have to wait for the RSI to reach up to 60, which it did right around here. So we can put that in, and that would have been on this candlestick right here. So what you can see once more is that we would have entered at the right time. We would have got in around this price. That move would have gone up in just around 3 or 4 days time. And then we made our profit there. So we got in at around 51,206. And then we would have got out at 55,800. 2 profitable trades that would have been, but of course it does not work every time, which is why you do need that stop loss in there. And to be honest with Bitcoin, if you would have just bought down here somewhere, you would be in much more profit, just buy and hold Bitcoin. But this can be a simple trading strategy if you want to trade a bit more actively. And also you can use it to just simply time your entries better. Also, your discretion on the timing of the exit. I've got a 10-day time window, or when the RSI reaches above 60. You may want to run your positions longer because Bitcoin is in such a bullish uptrend as of making this video. You also may want to deploy some other trading strategies, including day trading strategies, to possibly take advantage of the price movements down towards trend lines. That can also work to supplement this trading strategy, because one of the downsides of this one is that you aren't really entering all too often. You really do have to wait until the RSI is down here, which means that there's a lot of days that you may not be trading at all, and you may want to be in the market trying to make some money. If you want to know more about those types of day trading strategies, taking advantage of other price movements, definitely subscribe to the channel. There's going to be a lot more coming. I also do have some videos already on those, so you can check out the trading playlist. If you do want to trade on Binance, the link is in the description. You can sign up in a couple of minutes and really try this out. Check out the description for that and loads of other help. Do subscribe if you want way more helpful crypto content, and I'll see you in the next one.